Welcome back, and as promised, Madanagopal Ramu from Sundaram Alternate Assets is joining us now to discuss market fundamentals. Madanagopal, good morning. Thank you for joining in. I'd want to start off with IT because that seems to be the sector of the day today. There's a bit of a double upgrade coming in for Wipro as well this morning with ahead of the earnings season. Accenture's results also was a bit of a positive rub-off on the sector as well. But what kind of a quarter are you anticipating this time around for these IT companies, Madanagopal? Because the situation on ground does not seem to have changed, evident from the commentary from a lot of these companies.
Yeah, I think IT sector is in, probably you have to look at the other way. The downgrade cycle is done with IT sector with the kind of order flow they have seen and the discretionary spending picking up momentum in the second half. I think some bit of underweight positions people will try to narrow it down or even take it to equal weight positions. And even we have done that. We are particularly interested in the IT mid-cap space, companies focused on ER&D, because we feel that the structural growth that is happening globally on the AI space, it's better to be played with some of the mid-cap names in the IT sector in India. So we feel that in the current valuations, the downgrade cycle is coming to an end, and hopefully second half likely to be better. It's time to kind of fill in some of these stocks. That's the view that we carry at this point of time. Large cap IT sectors, I think they will disappoint from a growth perspective. Even there, the downgrade cycle might be done, but I think even the best case, you might look at a 10% sort of an earnings growth. But some of these mid-cap IT names can give you a 15 to 20% growth. And if you can get them at the right valuations, then I think they can give you a good return from a year perspective, in our opinion.
Okay, it's just that IT has gone up 6-7% in the last 1 month itself. But, I was looking at some of your portfolios that you manage, and one stock you appear to be very bullish is Hindalco, because that's been a stock that you've added onto your positions in May. Can you tell us the reasons behind that? And is this a long-term call, or is it just we're in a cycle and therefore it's a bit of a tactical one-year call?
Metals, we have added one position, that is exactly what you mentioned, the Hindalco. What we are seeing globally is the demand for non-ferrous metals is improving. The outlook is improving given the spending that is happening in the power transmission space. Also, the demand from data centers and electric vehicle market. The demand for non-ferrous metal, particularly aluminium and copper, is likely to stay stronger. And the interesting point is by next year, China will hit the cap on most of its capacity. And if China does not add any capacity, then there could be a period where you will see the aluminium prices and copper prices can strengthen further and can be structurally going up from there until the new leg of capex happens. Probably it can happen in India or in Latin countries or in somewhere in East Asian countries. But it could provide a period of 2-3 years where the metal prices, particularly non-ferrous metals, can look stronger. And these metals play on the emerging sectors, which are seeing investments globally. And that is the reason we have gone into Hindalco. Valuations are very attractive for Hindalco. The recent earnings numbers suggest that there is an earnings upgrade cycle for Hindalco, even without the metal prices going up. So if metal prices further go up from here, it's a bonus for us. So that's the reason for getting into, but that's a small portion of the which we have added in the metal space. So that's what view we have on the metal space.
Madanagopal, a very interesting name that you have added recently is Amara Raja, and that stock has already doubled in 2024 already within the first 6 months. Now, given the fact that the stock has seen this kind of a run-up and to take a bet on it after it's gone up 100%, which means that you see that there is scope for further upside, say towards the second half of the year and also for the next 2, 3, 4 years as well. What's your call there?
Absolutely. I think electric vehicle penetration in India is likely to be better than what is being estimated at this point of time, given the affordability of electric vehicle batteries have improved meaningfully in the last 6 months or so. We actually taken a position on Exide as well, and we talked about it in our previous episodes also. We feel that the electric vehicle penetration in India will be much better than what Street is expecting at this point. And we are talking about capacities coming up in India to the tune of around 6 gigawatt to 12 gigawatt for Amara Raja and Exide. Just if you look at the global scale of what China is doing in this space, they are almost reaching 3,000 gigawatt by end of this year. And if you look at with the help of Chinese, not just Indians, I think Europeans and even Latin countries are adding huge capacity. If I take some of the comparable countries globally with a very similar sort of income levels, they're all talking about 25, 30 gigawatt of capacity addition. So we are talking about very small number at this point of time in case of Exide and Amara Raja. We clearly see in next 10 years, the number that we talk about in terms of capacity in electric vehicle batteries can be substantially higher than what we are thinking at this point of time. This is a structural story until the electric vehicle battery prices remain low, which are already low, and further learning curve can happen and keep them low or even bring them down from here. I think it's better to be played with the quality names like Exide and Amara Raja. They have very good balance sheet. They have very good ROC in the existing business. They have very good market cap at this point of time, which they can dilute to put in money more into this space. And they can look at a reasonable somewhere between 15-20% ROCE in that business. I think put together all this and the current valuation of Amara Raja around 25 times 1 year forward, it's the cheapest stock among the quality mid-cap auto names. I think it makes more sense to be positive on this in these from next 2-3 year perspective as well.
Okay, in that same emerging leadership fund, you've also initiated positions in PB Fintech. Again, this is a stock which has done very well, 85% return year to date. In the last 1 year, it's more than doubled. How much more upside do you see in PB Fintech? And have you accumulated enough, or are you still looking to add? If someone's doesn't have a position in PB Fintech, is the stock still attractive?
Actually, we added it some time back, and some from where we added it has already given some returns. But what is important to keep in mind in these kind of stories, again, the philosophy with which most of our stock picks are happening at this point is the value migration. I think most of the value migration in insurance companies will move away from the traditional insurance manufacturers to the distributors, and particularly the e-commerce distributors. If you look at what is happening in PB Fintech, it initially used to be a story on protection, selling protection insurance products. Today, they are very strong in health products also. We feel that these two put together can enable PB Fintech to continuously grow in high teens, and it can also enable PB Fintech to improve upon the margins, which are right now not being discounted. So it's a very good compounding story. These are not traditional low teen compounding stories. These are high teen compounding stories. Valuation, I won't say it's super rich. It's reasonable for the kind of growth that this company can deliver. I think execution is key. So we have played very similar stories in the tech platform names like Zomato. All these companies are right now getting the benefit of value migration that is happening from the traditional businesses in the same space. And a lot of this profit pool is shifting to these guys. And in that framework, I think PB Fintech makes a lot of sense to buy in and hold on. Don't expect doubling of returns in these stocks. These are going to be 20% compounding stories, and managements which are executing their plans in an impeccable way.
Right.
That is the story behind PB Fintech.
Madanagopal Ramu, pleasure as always. Thanks a lot for joining in and sharing with us your views on the sectors and specific stocks that you like. Madanagopal Ramu there of Sundaram Alternate Assets. Time for a short break. Up next, a corporate conversation. Vimal Kejriwal, the MD and CEO at KEC International, joins us on the other side to discuss the recent order wins and the road ahead for the company. Stay tuned.